Okay, welcome everyone. We'll start lesson. Today lesson will go through LO3, which is Learning Outcome 3, which is about be able to apply taxation planning measures to minimize or defer the tax liability. That's the key which we will go through. During our previous lesson, we also discussed about ethics, which is, we said, popular people chat in offices, which is PPCIO, to memorize and easily understand what those are 5 professional code of ethics. Normally all professional bodies follow those, whichever named like ACC, ACMA and all of this. Professional behavior, not conflicting information, to the point, not self-interest, professional competencies, up-to-date knowledge. We do CPD records every year, 35 hours in a year. Competencies and capabilities. We should be competent, because the capabilities, abilities, but carry on, upskilling. Confidentiality, of course, we have a GDPR, but we have ethics as well. We keep the client information, not declaring to third party without the consent. If we have the wider interest of the public to declare, then we can. Integrity, honesty, which is true and fair. And objectivity, not biased information, are objective to provide true and fair information to users. So we had a discussion in the previous lesson: parent, company, subsidiary, and associate. If the parent owns 50 or more percent, the other company will be subsidiary. And if you own it 20 to 49%, that will call associate. And if you have investment less than 20%, we call simple investment. So we had a discussion in the previous lesson. Okay. So today's lesson is our indicative content, which cover the type of investment expenditures result of reduction in tax liability, both incorporated and in unincorporated business. And I wish will achieve these objectives at the end of the lesson, and our discussion will be focused on this. Okay, so we said you can use whichever the finance sec, because of course it's not exam based, your course is assignment based, so you can refer I'm using finance this, yes, and your calculation will be based on those rates, and you can add the examples in your assignment to meet the learning outcome. Yeah, that's which we had a discussion in the previous lesson. Annual investment allowance rate, yes, so expenditure limit, revenue, capital gain tax, yes, normal rate, lower higher incomes. And we have 3.1, evaluate the type of investment and expenditure reduction in the tax liabilities. Since some company pay tax, and impact on corporation tax must be considered in any investment appraisal, so we can appraise the tax element in the investment appraisal as well. So we can look around the tax charge on the operating flows or the units. Tax relief on the investment expenditures are we call written down allowance, yes, tipper relief, which we can look around, and we also look around the NPV, net present values of those. So that's which also we use for the appraisal purposes as well in other units, which is investment appraisal. So impact of the taxation on the discount rate we use when calculating the wages average cost of capital, WACC, or the cost of debt, should allow the post-tax figures, has been adjusted the tax relief on the interest. And normally the way, they determine the WACC, so the no extra work is required. So impact on the taxation on the cash flows. Taxation has the following effect on the investment appraisal. Project the cash flow will give the raise in the taxation, yes, which itself we can look around the impact and the project appraisal when we do tax and taxation elements or tax relief. So organization benefit being able to, of course we can't claim it depreciation, but we can claim it capital allowance. So any capital, so we know what is the difference between capital and revenue expense. We all know, yes, revenue expenditure and capital expenditure. Is the key difference? Anyone please?
Come again, sir.
Capital expenditures and revenue expenditures.
When you say capital revenue expenditure, the revenue expenditure are the recurring expenditure that you incurred in the day-to-day activities in the course of running a business. But capital expenditure is an expenditure that you incurred on asset that is being used in the running of the business and is being spread over a period of time instead of instead of writing it off through the P&L account. Rather, you capitalize it in the statement of financial position.
Excellent. Well done. Great. Yeah, that's all about. Great. Good stuff. So that's we can claim on the capital expenditures written down allowance, like, on assets. Yeah. Tax deductible alternative to depreciation. The effect of these, reduce amount of the tax that organization are required to pay. In practice, effect of the taxation are complex and influenced by the number of factors which we need to be look around. Taxable profit and tax rate and the company's accounting period. Sometimes the company decide, their accounting period fall in 2 tax years. That's, the rate and the tax can be divided accordingly. Proportionate capital allowance, losses available set off, which we can, but many of these issues ignored, simplified the purpose of NPV, net, I guess, key value or net present value of the investment. Okay, so that's we can look around capital allowance, which we can for the tax purposes. A business, may not deduct the cost of the asset from its profit as a depreciation. In the way we can look around the accounting purposes, we can claim written down allowance. The basic rule we can look around asset, short life asset, or main pool assets. Yes, special pool assets. Of course, we need to look around the categories and which asset is fall under which, and we need to appropriate. Are you going to dispose, scrap? Are you changing to the new asset? So we can look around the original cost of the asset, cumulative capital allowance claimed, if we already, what is the written down value of the asset now, disposal value of the asset, the balance allowance or the balancing charge, which we can calculate, and that's, is used as well. Yes, other is the timing of the asset purchase, always is quite crucial. We can look around the first year of ownership, second year of ownership, and the rates, we need to be apply accordingly, and we need to be portions. Asset bought at the end of the accounting period, so we can look around here next, so which year you can, first year allowance claimed, again the profit earned, yes, second years and the third years, and we can look around. Other is if you have a previous year losses as well to adjust your profit, which we can laying out the long NPV question. The following, of course, you're not doing exams, so we just a matter of, in your assignment. So net trading revenue, you have taxable profit, net trading revenue times by tax rate, investment, residual as scrap value, tax relief, which we can, the written down, and the working capital flows. So that's, which we can look around the pension and other efficient investment product can be. So pension contribution to pension scheme, enterprise investment schemes, various investments, seed enterprise investment. So we need to be look around there, there some industry, some sector, we have a sector relief as well. So those we can really, carry on looking which sector we are doing. For our assignment, we can pick, any example from our book, so which will be absolutely fine to address the learning outcome. So type of the trading loss can be again the total profit, again the future total profit, which we can carry backward and current. So that's, if you have relief again the total profit before qualifying, which we can look around the must, the claim, the profit against state and the claim the previous 12 months, claim optional. We can look around those, examples which we'll go through during our assignment discussion as well. So suppose if you have a profit, so loss can be adjusted in that year, or you can the following years. If we have written down allowance to claim the year first you do, and then you can loss transfer, because the loss can be transferred up to 5 years. Okay, so carry forward relief. Yes, trading loss are automatically carried forward if the grant or the carryback claim have not been made, for any losses remain, unrelieved after the grant years, and the carryback, the claim have been made, which we can. So we can look around like, 1st April trading losses are automatically carried forward again, the first available future trading profit. So cannot be against any other profit. So we can post, April's claim to offset again the total profit, and we can choose, and we can adjust it accordingly, which will go through some numerical side. Okay, so this is the template. Normally the pro forma we use. Corporation tax losses. So trading income we have, let's say, different years we've been. Other income we have, so net chargeable gain we have, for suppose total profit we have now, and loss, if we have the current year, and then back, if you not claim it before and carry forward, yes, can be the following year. So that can be, if you don't do it, less, it's wasted, it can be. So we need to be total taxable profit that we can calculate. Okay, so next each year we can, of course, we can proportion, it depends your accounting period, the profit which we can qualify. In the short previous accounting period, the losses can be carried back 12 months, and this usually means the loss can be deducted from the profit of the previous accounting period. However, the previous accounting period is less than 12 months long, it is impossible to carry the losses back to cover in the proportion of the profit for the period of the proceeding. So that's which we need to be look around. Okay, then the factor to be considered when choosing the losses relief, two main consideration. Does the company want earlier relief as soon as possible? Sometimes companies can claim with because they are expecting we are doing some trading or some others, we will be more profit and we can adjust it, and reduce our tax bill. Okay, so capital losses automatically relief again, the current period chargeable gain, any excess losses carry forward and relief again in the future, and no carry back relief available, and can only be set up again the chargeable gain or not the income. Okay, research and development tax, the credit apply the small and medium enterprise SME can deduct, an additional 130% of qualifying expenditure for the tax purposes for every £100 spent on the research and development. The allowable tax deduction, original 100 plus further, yes, 130 of the total tax relief can be. So which we can look around the rule of the IES, particularly if the deduction create a losses may be surrendered for the cash payment from HMRC 14.5%. So that's, which we can look around the rule in that particular year. The personal services company, IR 35 NT avoidance legislation, also called now IR 35 after the press release announced, which we can look around the personal service companies, usually to just, one shareholders who use the companies to provide his or her services to client. The legislation applied to PSC is used this, which we can look around the employment relationship. Of course, implied, self-employed, and all, there are a lot of issues being in these, which we can look around within. Okay, the client, the owner, the PSC, and then the shareholder is, and the workers, and relevant, the engagement. Legislation is only applied to the relevant engagement for the contract between the company and the client would have been contract of employment or absence of PSC. If the IR 35, the client company is not affected, PSC has to be treated income from the relevant engagement arising tax year and paid out the salary to employees and account income tax and NI, which is national insurance. Of course, we can look around only the deduction. Of course, again, we need to be look around in which year we are talking about, and we need to be in assignment purposes we can. adjust it accordingly. Then we have a 3.3 is evaluate the mitigation of the tax for individual and the businesses. When we're providing the tax planning advice to client, you are fully responsible to be advised. You give the fundamental principle and professional competences really we need to be think about. Maybe we can't say come on because it's not my area, I'm not aware of the inherent tax or all others. Maybe we can say no. Yes, so that's it's quite crucial we can, because sometimes it can be because we're not expert of all the areas. Of course, we can look around the rates, we can further explore, we know how to apply the rates, but we need to be, of course, sometimes we need negotiation with HMRC will take time, incur expense, and sometimes it can be without spending tax, and we need to be make sure go through the legislation that particular in that case can be. Tax variance, yes, which we can look around in terms, is the threat to the fundamental principle integrity, which we're not supposed to be, and the responsibility, of course, end of the day, client responsibility, they should provide all the required documents, or based on the document, we can advise to the client within the rules. Yes, otherwise you pay and errors and exist, so we need to be make sure declare those if we have errors but not frauds. Yes, that's because we objectivity, especially in VAT returns and all, it can be that which we need to be. A direct tax avoidance scheme, promote tax avoidance scheme is related to the direct taxes, income tax and national insurance contribution, capital gain tax, corporation tax, inherent tax, and stamp taxes. Yes, so we have to, our obligation, disclosures, and also obligation on the taxpayer to disclose, details of the scheme of the certain cases. Notification is required. Promote of arrangement, proposed, arrangement, and the main benefits. Enable any person to obtain the advantage of relation to the tax. The tax advantage is defined as a relief, is increase the relief from the tax. Repayment or the increase, repayment tax. Avoidance reduction. So we can look around any person that comply with disclosure the provisions, liable or the penalty not exceeding 5,000. That can be. So again, if we need to look around each the years, we have a VAT value added tax avoidance scheme. So business use VAT avoidance scheme must be disclosed. Yes, their use and the certain of VAT avoidance scheme is notify the scheme or put pre-register, and the penalties failure can be, which we discussed in the previous lesson as well. Some penalties, late payments, and we discuss about different schemes of VAT as well. So serial tax avoidance. So we can look around, taxpayers who use more than one tax avoidance scheme, which been created on under and after that, which again we need to be look around each year, whichever year. So in our assignment purposes, we can pick one or two examples which from the booklet, and those we can use it for to meet the learning outcome. 3.1, evaluate the ethical and professional issues can be given tax planning. So ethics are the tax avoidance scheme. Ethics, of course, we discuss about fundamental principle, disclosure information, conflict of interest, tax planning is illegal, which we can, prospective client, tax irregularity, money laundering, all we need to be really focus on, direct tax avoidance scheme, VAT avoidance scheme, and serial tax avoidance and general acceptable regulations, which we can look around these further. And the ethics tax avoidance schemes, we look around ethically, morally, and the tax planning, of course, is illegal, which we can, but not doing intentionally, avoiding, but disclosure need to be made accordingly. Tax avoidance scheme, direct tax avoidance, promoter must disclose something. Taxpayer man the benefit of the scheme, obtain advantages in relation to the tax. Penalty of the non-disclosure initially up to 5,000. VAT avoidance scheme, yes, businesses use the scheme must be disclosed, and penalties can be if we don't do it. We can think about what we can save according to different schemes can be in certain period of time and in different tax years, which those we need to be follow accordingly. Okay, then fundamental ethics that leads to compromise our professional code of ethics, self-interest. Either you're a member in practice or member in business, we need to be look around having the financial interest in client. Yet depending upon the client fees, it's significant proportion of the income that maybe you're not giving the client, or you're working in the best interest of the client, because the client can be move around somewhere else. We never charge the contingent fees, self-review, checking your own work, yes, audit and things. We not, it can be compromised our professional ethics. Familiarity, if we know each other number of years and the gift, and that can be the problem, and that can compromise. Intimidation, yes, it will say, no, you're in my job and you're in our business, it depend each other. So maybe that can be a part of intimidation. Yes, pressure to reduce the quality work to keep the fees down, that can be also intimidation. Advocacy, acting on the behalf of an audit client, which is dispute with third party, that can be create a problem as well. Or if the takeover or mergers happening and you are both client and they both advise from you, so you have to think about how you draw the safeguard. Any question, please? Member in practice and member in business is almost, these ethics equally apply. Doesn't matter, are you dealing with any professional bodies? And then the one is a distinction criteria. We can pick, any particular issues, current issues in taxation, and that's which we can discuss within our assignment, and that's, which during our assignment we can pick any. So we've been given some issues here which we can look around, and that's, which we can address. So these some examples, please, which we pick it from ACCA exam paper. Those we can look around. The person is resident in UK or overseas. The domicile, like you may be seeing the prime minister's wife, yes, in India domicile, and that's that was the issue was raised, and there was no, she not break the rule, but what is about the moral and ethics? She lived here, she worked here, but I have dual domicile, and these the things which we can look around for the in those the moral principle as well. Any question, please, from anyone? Okay,
Yes, no question for now. Hello.
thank you. And that's today lesson we discuss about LO3, and the next lesson we'll look around remaining elements and we'll do assignment discussion. That's the key, and then I'll try to arrange some sample assignments. So I gave you last time the booklet I shared with you on the WhatsApp, yeah. So hope that will help you as well. If you want further, I share with you these. If you want to look around some issues, these please you can. So if you want to set up account, is absolutely free. Maybe you can do opentuition.com and look. It's called Taxation, which is F6 exam of ACCA. That's good, scenario based learning, because we can pick it, our ACCA Finance Act, whichever years, and look the examples of applications, so which we can pick some examples and those we can use it. And other than that, I send you the personal and the business tax, the handouts, those which we can pick the examples, those we'll use, and that's what we discuss during our assignment discussion lesson, where we can pick it to address the learning outcome. Okay,
thank you.
Thank you. Hope those are doing corporate.
Yeah.
See you tomorrow. Otherwise, see you next week and speak to you next week.
I have a question. I was about asking a question.
Sure, please.
The assignment on the portal, the student platform, is that our assignment so that some of us can start practicing, or we should expect a new one after the end of the course?
Okay, let's, I'll take you back to our Moodle page. So it should be the same assignment brief. They carry on updating our back office. So yes, so it should be the same. Here is the assignment brief which we have here.
Okay.
So that's really used. And we've been given the task, yes. Under each task, if we look, if you before, because we do assignment discussion session, but these are assessment criteria, yes.
Okay.
And that is learning outcome 1, which is mean lesson 1, the slide that will cover, yes, key points. and if you want merits and distinction criteria you want to work towards. And then this task 2 is 2 and 4. We're not done 4 yet. Yes, next week we'll do the learning outcome 4 and 2, which we did the previously. That's covered the point. And then task 3 will cover our learning outcome 3, which we did discuss today. Yes.
Yes.
And investment and those tax planning. So we do that's we address. So these are all, and all the bullet points you've been given the guidance within that template as well, if we want to be. So that's what further we discuss during our yes. So you can use it that brief.
So if I had it correct, it means that we are supposed to submit the assignment by 17th of February because the last lectures will be on 27th. That will be next week. Learn outcome 4.
Next
then,
week, learning outcome 4.
Yes. Then the following week will be assignment discussion. That will be on the 3rd February.
Yes. So 3rd will be then your 10th, and try to be 17. Yes.
Yes, 17th. Okay.
Because normally we say people come on, because if we standardize it 2 weeks, but sometimes some personal circumstances people can't met it. Yes, but sometimes when we missed it because so many commitment, we all working, so sometimes it's difficult to go back and track it. Maybe you're doing other modules as well. So we can, it's a matter of putting things in order. Yes, you've been given the things within the lesson as well in the books. Yeah, picking some example, your own experience, throw it, put the reference is absolutely fine.
So after submission of the assignment, how long does it take back for the feedback?
2 weeks. We expect to submit 2 weeks. We give you the feedback and the complete the process.
Let me ask this question once again. In case there is a failure, what is the procedure? Because the last time we had an orientation, most of us, like David said, most of us weren't part of the first lecture. So some of these questions you couldn't ask. So if somebody do not pass the assignment, what's the, let me say, the implication?
You can resubmit it, yes, like a referral, or we can, because we're giving you feedback before final submission as well.
Okay, good.
90+% people pass, yes. If
Okay.
minor, the things we can say, come on, amend these and resubmit it.
Okay, most grateful.
So that's anyone else, any question? No. Okay.
Thank you.
Yes. Thank you. See you and speak to you next week.
Thank you then. Bye-bye.
Thank you. All right, thank you.
Thank you. Thank you. If you have a question, you can ask, otherwise we'll keep up to here. Thanks for attending, and hope we'll speak to you during our next lesson. Thank you. Bye-bye.
Bye.
Hello, Dave.
Yeah, I'll call you. Yeah,
Kindly take call the Ghana number. I think that